So I gave you a printout of notes. Sorry, it originally said chapter 15 notes on it. I need to change that. And McGraw-Hill, when I made the notes originally, we covered this in chapter 15, so it's throwing me off. So they are named correctly out on Canvas, though. So on Canvas, again, I did put a copy. It says chapter 16 notes. And then today, if you'll go into Canvas and open up the chapter 16 practice. You're going to do that chapter 16 practice. We're just about to get started.
Thank you.
Yeah. So we're just going into the chapter 16 practice from Canvas. So before we get started in the practice, I thought we'd just kind of talk a little bit about the chapter. So hopefully you did the little adaptive learning plan. I didn't look. But really this chapter is on job order costing. So really the same principles we learned in chapter 15 apply in chapter 16. We are just doing, just taking it a little bit further and talking specifically about a job costing situation. So with job costing, we actually are looking at companies that are doing jobs that are like unique, right? So there's, we're not making pencils. We would use process costing. So the two main costing systems are job order and process costing, which we'll cover process costing, you could probably imagine, in chapter 17. So when we're making something that's uniform and usually like, not a huge price, it's not a custom price. So if we're making pencils or desks or chairs or something that are pretty uniform, we would use process costing because they'd all go through kind of similar processes to be completed. Yeah. Make sure it's open. It should be, oh, did you find it? Okay. And say it's, sometimes, yeah, it shows up in weird places. So with job order costing, we're looking at usually manufacturing companies, and they're making kind of more customized items or materials. So it could be that, they're not just manufacturing something, but they're taking orders, they're working with customers and really making a product that's tailored to the customer. So it could be something like a computer even, if you've ever ordered a computer where you can choose exactly how you want it built. You can choose the processor and the RAM and all these different components that go into it. Or like I used to work in industry at an audio video company. And so when we did custom jobs, it was truly meeting with the customer. They would say, oh, I'm building a new building. I need video projectors, surround sound, whatever they needed, switches and all of this stuff. And an engineer would design the job, and then the installation manager and crew would actually go and complete it. So that's kind of the situation we're dealing with in job order costing. So we're looking at situations where we're manufacturing, but there may not just be, there's probably a lot of labor that goes into it too, because it could be drawing up engineering plans, meeting and consulting with the customer, all the way through procuring materials and then actually performing the job. So job order costing, we try to trace as many costs directly to the job as we can. Makes sense, right? Because we want to charge the customer. So anytime in job order costing, if I work in the job center and I'm, spending my time working on that job, I bill my time to that job. So that's kind of how it works. Whereas if we were working somewhere, if I worked in marketing or management or something, I would just bill my time to overhead. But we do trace time and materials as well as we can to each job. So if we're doing a custom install and we order materials for that job, that materials cost gets traced directly to the job. So we're still going to see the same flow as far as having a materials account and work in process, finished goods, all of that. The difference is now we're tracing by job. So now in work in process, we may have 5 jobs or 20 jobs or however many we're doing, and we're keeping like a job cost sheet for each job. So we're saying this is how much labor was spent on this job, this is how much materials went into this job. And then the only other product cost we have, right, we have materials and labor, direct materials, direct labor, is that overhead. So in chapter 16, what we're really trying to figure out is, well, okay, we have these jobs all going through these processes. How do we assign, you know, indirect materials, indirect labor, factory overhead, depreciation, all those overhead expenses? How do we assign this to the jobs? So that's a big part, other than tracing the cost through the process, the job costs. A lot of chapter 16 is applying overhead costs. So, you know, if we were making pencils, we could just add up our total overhead, divide how many pencils we made, and be able to say, oh, it's 10 cents of overhead per pencil, right? It's pretty easy to cost out. But with jobs, we have to come up with some way of determining how much overhead each job gets. So like this first one we only have 4, but the last one's kind of long. So that's why, you know, it's like, oh, some of these may be like no time at all, and then the last one's a little longer. Make this bigger. So what we do when we're doing job order costing is we come up with what we call a predetermined factory overhead rate. So we determine what's the best way to apply overhead to all the jobs in a fashion that's fair, right? Because if we just said, well, you know, all the factory overhead, we had 5 jobs, we'll just divide it by 5 and apply it that way. Well, that sounds in theory okay, right? But it's really not, because what if one job is way more higher cost and we spend a lot more labor, materials, and overhead, you know, a lot more time and money on it? Well, then, you know, these other jobs that take less time, we're applying more costs than are probably fair. So how a lot of companies or manufacturing companies do that is they base it on something. So a lot of times you're going to see overhead based on direct labor, which makes sense in theory, right? The more time we're putting into a job, the more overhead it would probably need, because we're doing, you know, actual factory labor, but also this indirect. You know, it's taking more time to work through the factory, the longer that we spend on it. So we come up with what we call a predetermined factory overhead rate. And you'll see, I think it's on your notes. The very first thing on your notes just kind of gives you the calculation to come up with that. Estimated overhead costs divided by the estimated activity base. So the activity base is just whatever we're basing it on. And most of the time it's direct labor, and in this case it is. So this one's pretty simple. Bergen Company estimates that total factory overhead costs will be $620,000 for the year. Direct labor hours are estimated to be 80,000. So to figure out what our predetermined overhead rate is, we're truly just taking the full 620 estimated overhead divided by the 80,000 hours. Okay. So how much do you get for part A, the predetermined factory overhead rate? Just 2 decimals. Yeah, very good. $7.75. So what that means is that we are going to apply overhead at $7.75 per direct labor hour. So every hour of direct labor we use on the job, we're going to charge them $7.75 of overhead. Okay. So that's how we just come up with a way to apply overhead. Let's see. So then they actually want us to apply it. So it says during May, Bergen Company accumulated 2,500 hours of direct labor costs on job 200 and 3,000 hours on job 305. So how much overhead was applied to those 2 jobs? Well, we've worked what? We have accumulated a total of 2,500 plus 3,000, so 5,500 hours. Then you just multiply it by your predetermined factory overhead rate. So how much overhead would get charged to just those 2 jobs? Very good, 42,625. So again, we just added up our total hours, 2,500 plus 3,000. Those are our direct labor hours, times the 775. Okay. So there we've come up with how much overhead to apply or to charge to those 2 jobs. And then it just says prepare the journal entry. Okay. Well, when you're using applied overhead, it always gets charged to work in process. You remember that was from chapter 15 actually. Whenever we went in from materials and then we had work in process in our inventory account, materials, labor, and overhead all got debited into work in process. So I'm just going to debit work in process at 42,625. And I'm crediting the factory overhead account. Factory overhead. So that's an estimate. You know, we're trying to just determine how much overhead we think we're going to need or use, and then cost it out so we can charge the customer, right? So that's what we debit and credit. That factory overhead account, you'll kind of see on your notes, I kind of just set it up for you, as a T account. On the left, when we debit factory overhead, that's always for actual overhead costs. So when we incur actual overhead costs in the business, when we know how much our indirect labor is, or factory depreciation, or rent on the factory, supervisor salary, you know, all of those fun things, those all get debited to factory overhead, okay? And then the applied overhead gets credited. So that's what that's just showing you there, that T account. It's just showing you actual overhead costs get debited to overhead, applied overhead gets credited. So this was applied overhead that got credited to factory overhead. Okay. Then we'll deal with later kind of the over or under applied overhead. We'll kind of talk about that in a minute. Any questions though on just the predetermined overhead rate? It's pretty easy, right? You just have to know what to divide. Okay. So this next one, we're really dealing with another predetermined overhead rate example because it is kind of one of the big concepts in this chapter. So on this one, though, they're not giving us the total overhead costs, if you can see, and they're not telling us just, oh, your estimated overhead is this much and your direct labor hours are this many. So we just have to delve a little deeper into it. So it says Spring Street Engine Shop uses a job order cost system to determine the cost of engine repair work. Here's the estimated costs and expenses. So, you know, it gives us all the costs for the period. So the first thing we have to do is figure out what the estimated overhead costs are. So just the overhead costs. So this kind of, you know, is a little bit of review for 15. Yes. Yeah, pretty much. That's exactly it. You would have not your direct labor, but no, because that's a direct, that's not an overhead cost. So your three product costs, you have direct materials, direct labor, and then overhead separate. Yes, it's direct materials. So yeah, engine parts, direct materials. Correct. So we don't include engine parts because it's direct materials. Direct labor would not be included. And then we'd just be looking for overhead. And you're correct. Anything kind of associated with the shop is overhead. So shop and repair, depreciation, supervisor salaries, property taxes, and supplies. Those are all overheads. So advertising, administrative costs, those are all those period costs. They're not product costs. So they're giving you all the costs, product and period, materials, labor, and overhead. So we just want the overhead.
You said the administrative office salaries is overhead as well?
No, it's not. It's a period expense. So yeah, it'll just be these four costs. Shop and repair, depreciation, yeah, these four. Correct, yeah, an overhead cost is a product cost. So it'll be anything tied to the product itself that's not direct materials or direct labor. Yeah. So yeah, anything related to administrative will always be a period expense, and we're not worried about those. So we know to do our predetermined overhead rate, we take estimated overhead, total estimated overhead, and divide it by our activity base. So we can add those four up, right? So what do you get for total overhead? Good. So our total shop overhead is $220,000 when we add up those four overhead costs. And then we have to figure out what activity base to divide by. Well, they don't tell us, so we're going to go off of direct labor. Okay. And we have our direct labor, the total cost. But if you remember, we just wanted it off, we wanted to divide by direct labor hours. In that first one, we took estimated overhead divided by direct labor in hours. They give it to us as a total cost. But they also give us the rate per hour. So to figure out how many hours of direct labor we use, we just want to take your total direct labor cost of $660,000 and divide it by the $30 per hour. Okay. So then you should get what, 22,000 hours.
So our estimated activity base for our total direct labor divided by the hour.
Yeah, you'll take your total direct labor divided by the hourly rate to get that direct labor hours. So whenever you're looking for an activity base, you always want to do it in hours and with direct labor. So yeah, so we take total direct labor divided by $30 per hour. So we know the total labor hours estimated are 22,000. Okay. So then we had total overhead of 220,000. We have 220,000 of overhead. Yep, divided by the 22,000 hours. That's a nice even divide, right? $10 per direct labor hour. Again, that one's just a little bit different as far as, we have to come up with the total overhead and come up with our activity base to divide by. But that's what we just determined. So we are going to apply overhead at $10 per direct labor hour. Okay. And so from there, if we had a job we were working on and it had like 50 hours of labor, we would take 50 hours of labor times $10 per hour, and we would know to apply the 500,000. That's a lot. $500 of overhead to that job. Any questions on that one? All right, next one. So this one's really looking at job costs and then trying to figure out, we have some things we want to figure out and calculate completed costs and kind of go through our calculate how much was completed and things of that nature. Okay, so we're going to do some journal entries and calculate completed job costs. So in this one, Old School Publishing began operations on January 1st. We have jobs 301 and 302, which their total cost sheets are listed here, were completed during the month. All the costs were reported. We have job 303 and 304 are still in process, so they're still in that work in process account at the end of the month. And their materials and labor have been charged, but we haven't charged any factory overhead to those jobs yet. Okay. And then they give us some additional information. In addition to materials and labor, there was 8,000 of indirect materials used, which is an overhead cost, and then 12,400 of indirect labor, which is another overhead. And then, it just gives us the cost sheets. So in job costing, this is what you'll see. And again, it says these two were actually finished. They were completed. So all of those costs we're going to see, those are in finished goods until they get sold. So once they're completed, they're transferred to finished goods. So just like we saw last chapter, but now we're dealing with job by job. So we're just breaking it into jobs. 303 and 304, all of these costs are still in the work in process account. Okay? And as you can see, we need to apply some overhead to them. So the first step it wants us to do is it says journalize the summary entry to record each of the operations for January. So we're really just working on our journal entries in job order costing. Oh no, it's actually a little different than that. It's not broken down by job right now on our journal entries. Because on A, what it wants us to do is it wants us to journalize direct and indirect materials used. Mm-hmm. Yeah, so we're just looking at just materials. So that's exactly what we would do. Let me move that up just a tiny bit there. Okay, so it says direct and indirect materials. Well, it told us up in the word problem that we had 8,000 of indirect materials. So we already know that. But we need to know how much direct materials were used in January. Well, these are all direct materials, right? All four of these. Each job has direct materials. So you just need to add them up, okay? So for direct materials used, I would just take the 10,000 from 301 plus the 20,000 plus 24,000 plus 14,000.
$68,000.
Very good. Yeah, 68,000 is your total. So when direct materials are used, they're put into the process. If you remember from chapter 15, we started with materials. When we purchased materials, we debited materials. Well, now that's just showing we want to show them leaving materials and going into work in process. Okay, so direct materials is always debited to work in process when they get used in production. Okay, so work in process gets debited 68,000 for direct materials. Indirect materials get debited to factory overhead. Okay. Mm-hmm. Yeah, direct materials are going to get debited to work in process. Well, we'll transfer them out. So kind of how it works is it's you might erase it. So we're still dealing with our 3 inventory accounts. They all have materials. Yeah, work in progress and finished goods. So kind of how it works, they're all inventory accounts. So we purchase materials, and we don't know how many. I'm going to make up a number. It's not in the example. But say we purchase like 400,000 in materials in the period. So that's purchased. Well, now that 68,000 is what we've assigned to jobs. So when we assign materials, it comes out of the materials account and gets assigned to work in process. So what was that, 68,000?
Yes, no.
So 68,000 gets credited for direct materials, and that flows in to work in process. Right? And then, that we would have the job sheets in all here. All 4 of those job sheets are taken into account, and so we can see where all the direct materials belong. And then you'll see in a minute when a job gets completed, its total cost gets transferred to finished goods. Mm-hmm. Yeah, this would be a debit to materials and a credit to cash or accounts payable. Yeah, you got it. And so they just kind of go through the process. So with overhead, though, with like the indirect materials, we've created this new factory overhead account. Which, with factory overhead, any actual cost, so if we know it's a real cost, any actual overhead cost gets debited to overhead. And then anything we've estimated through that predetermined overhead rate, we consider applied overhead, what we've costed to the jobs, which we haven't done yet, but like the factory overhead in jobs 301 and 302, those are applied based on direct labor, like what we calculated in the last 2. So applied overhead gets credited. So for those direct material or indirect materials are an actual overhead. We paid $8,000 for indirect materials. So that's an actual cost. I'm going to put IM for indirect materials. So that's where that cost gets. Any overhead that's an actual cost gets debited to factory overhead.
And where'd you say you got the 8,000 from again?
It was up, like if you scroll up, they just told us.
Yeah, it was in the last part that gave us the indirect materials and indirect labor. Did you not include the indirect labor in that?
We will. We're just on materials right now, though.
Okay.
Yeah. Yeah. So they tell us 8,000 materials and 12 for of indirect labor. So those we know when they tell us were used, we know their actual charges. So it's a little confusing at first, right?
Yeah.
That's why I like using the T accounts to kind of show you guys. So all total, we use what, like 76,000 in materials. So that full amount comes out of materials. So I would also credit materials for those indirect 8,000. Okay, so your journal entry is a compound one.
So we keep direct and indirect materials together.
Mm-hmm.
And then all the separate amounts.
Yes, yeah, it all comes out of that materials account, but we do want to say, well, 68, you could technically show that as 76 right there. 68 of it is direct materials going into work in process, and 8,000 is an actual overhead. Yeah.
So we're going to credit materials.
You got it. Yep, so I'm going to credit materials 76,000. And that takes care of basically just the journal entry for the month of showing what we did with materials. Okay. It's kind of a rough picture on your notes. It kind of came through a little, well, I think you can kind of see it on page 2 of your notes. I put this on here because I thought it was helpful, this top little diagram here. It actually shows you the flow of costs for like an entire period. So you can kind of go back and trace. So you can see, you know, like where they had a beginning balance in materials, and then in part A, they purchased materials. And so then B was materials requisitioned into jobs, and D was overhead, which was indirect materials. So it's kind of breaking it down in the T accounts. I know it's just kind of small, but it's in the chapter PowerPoint too, I think. I know it's in the book because I took it from the book. I mean, I borrowed it. So I think it helps to write them out as we go too, but you can kind of refer back to that diagram to see the flow of all the costs. Because it is a lot. You know, it's a lot of new material and managerial to deal with cost flows. So right off the bat, right? We're like right out of the gate. Here's all these new things. So that's dealing with just materials. And then part B is our second product cost, our labor costs. So they want us to journalize direct and indirect labor used. So as you can imagine, it's kind of similar, right? Like we would need to add up all the direct labor. Okay. Yes, yeah, sure would. So let me see. So I should have, you know, all 4 of my jobs all have direct labor charges. Very good, 55,000. So all of that direct labor. So direct labor also gets charged to work in process.
Wages payable or contract?
Do it.
Wages payable considered a contract?
No, it's actually just a liability account.
Okay.
Yeah. So the reason they use that one is that we haven't paid the wages yet. So we'll pay them at a later date. So this one, yeah, when direct labor gets used or assigned to jobs, we debit work in process, and we're going to credit wages payable. Because that's labor hours that we've incurred and that we owe wages to our employees for that amount of labor. I know it increases on the credit side. Yeah, it's a liability account, so it increases on the credit side. Decrease it. So when we pay, you debit work in process, the 55,000. Yeah. And then kind of the same with your indirect labor gets charged just like indirect materials did. Okay, so indirect labor, the 12,400. Indirect labor is an actual overhead. So it gets debited to factory overhead. And since it's labor that we owe, it gets credited to wages payable. So it's kind of the same format. We have work in process for direct labor of 55,000. And then we debit factory overhead for the actual cost of indirect labor, the 12,400. And since that's all labor that we owe our employees, we are going to credit wages payable 67,400. And then what would happen is when we cut paychecks, we would debit wages payable and credit cash to show those that being spent, that being paid. Okay, so that we have our materials and our labor. And then part C says factory overhead applied to all 4 jobs. A single overhead rate is used based on direct labor cost. Well, they showed us that factory overhead charges for 301 and 302. They don't tell us total direct labor hours for estimated overhead. But we need to calculate overhead for 303 and 304. Any ideas how we might go about that?
Sorry, say it again.
It's like coming in now. So in 301 and 302, they already calculated the overhead for us and applied it. It's an applied rate. 303 and 304, there's nothing in there, and we need to apply factory overhead to those jobs. They've already done it in 301 and 302, and they tell us that they use direct labor hours to come up with that. Any ideas? Because they gave it to us kind of backwards. They gave it to us already calculated. Flip it. You're there. Yeah, there you go. Good job. Yeah, we're actually going to take this applied overhead, the 6,000 they gave us, and divide it by direct labor hour. Just kind of flip-flopping. Because, you know, we would have multiplied, right? Direct labor hours times that predetermined overhead rate. So we're going to figure out, we're kind of like reversing. So if you take your overhead divided by your direct labor, it'll tell you the percentage it was applied, or the rate. Uh-huh.
175.
Yeah, you got it. Yeah. Or like, yeah, 75% or 0.75. Yeah. So overhead is applied at basically 75% of labor. Because we're only looking at dollars here, we're not seeing the hours and all of that, so we can just consider it, factory overhead is applied at 75% of labor. So if we divide them, we can get that rate. Yep, that's exactly what you do. Yeah, so for 303, you would take 18,000 times 0.75. And then same with 304. Do what? Yeah, they want the total overhead, so we would take, yeah, the 18,000 times 0.75, and then the 12,000 times 0.75, and then we'd add all 4 up to get our total overhead.
We do that vice versa if you're giving the other information.
Yeah, if you were given it in a different way.
If they were asking for the direct labor.
Yeah, you might be, yeah. You probably would because you would know how it was. Yeah. I don't think they ever ask you to do that, but you know, sometimes they do weird things. So.
You got 41 or 41,250.
Perfect. Yep. Yeah. So your total work in process charge or your total overhead should be 41,250. So it should be the 6,000 plus the 1,275 plus those two that we calculated. So on part C, applied overhead gets charged to work in process because that gets charged to the jobs. So 41,250 gets debited to work in process and credited, going too far there, to factory overhead. So again, work in process gets all the product costs. So now we have that applied overhead of 41,250. And all three of those costs are split among those four jobs. And then applied overhead gets credited, so factory overhead. Okay. Any questions on that one? The last one on this question is part D. It says, we need to journalize the completion of jobs 301 and 302. So 301 and 302 have been finished, and they need to be transferred out of work in process. So what do you think I debit and credit to show those two jobs being completed and transferred out? Very good. Yeah, we're going to debit finished goods and credit work in process. And all we need to do is just add up the total job costs. So it was 301 and 302. So 24,000 plus the 49,750. Very good. 73,750. And now there's 301 and 302. And that gets debited to finished goods. Good. Yeah. I think otherwise it gets confusing. Right? Yeah. Well, I'm glad you appreciate them now, right? Like, I always find, like, especially in managerial, because, and then in cost, because it's an upper level, kind of similar to managerial. It's just, otherwise it's really hard to see what's going on, you know, and it's hard to remember debits and credits all the time. So it's like when you draw those out, it just makes it a lot more clear. So I'm glad you guys like them. I'm a big supporter of the T account. And then, you know, we could go back through and balance accounts and see, you know, what was still in work in process. Well, it should be jobs 303 and 304, their costs. You know, we could see how many materials we had left, all of that. Okay. So those are some of your journal entries just for dealing with job order costing, okay? And, you know, they really are pretty similar to last chapter. The difference is we have that applied overhead now that we're coming up with. Any questions on that one at all? Understanding the predetermined overhead rate and then those journal entries is a pretty big part of it. It's really the meat of 16, kind of understanding that the job cost stay, you know, the job cost stays with itself as it goes through. So job 301 started in work in process, then it gets transferred as the whole job into finished goods. And then if we were to sell that job, then it would transfer out of finished goods and be costed to cost of goods sold. Okay. So the flow is the same as chapter 15. It's just there's a few different things to know. This one's kind of long, this last one, but I thought it was good because it actually has us doing some T accounts too. And kind of going through, just practicing again, kind of those journal entries and then seeing how it affects the accounts and keeping track of job cost sheets and things of that nature. So again, really the bulk of it. It's a lot of calculating. You could probably, if you can see my notes I made. So I'll probably give you some of the calculations as we go through just to save time. But we'll kind of walk through it. So this one, we have Hildreth Company uses job order costing. And it says the following data summarizes the operations for April, the first month of operations. So we have Part A, materials purchased on account, $147,000. And then materials requisitioned and factory labor used, and they break it down by 6 jobs. And then they tell us this last line for general factory use. I know that's my indirect materials and indirect labor. So that last line is overhead charges. And then they tell me a couple of other things. We had some actual factory overhead of $6,000. We had depreciation of $4,100, which is another overhead. And then they give us the factory overhead. That predetermined rate is $40 per machine hour. And then they give us all of our machine hours used on all the jobs. And again, this is a lot of information. On F, they tell us in the period we had 4 jobs that were completed, 101, 102, 103, and 105. And then we had 3 of those jobs were actually shipped and billed to the customers, 101, 102, and 105. Okay. So we're just taking it a little step further. We have a little bit more going on, but the same ideas. Erase some of this. And it actually provides us some T accounts to work into. We can write a lot of it on the board as we go too, just to kind of keep track of it. So again, we're just journalizing. We're doing journal entries at the first, just to deal with these A through F, or A through G, I'm sorry. So the very first one, if I scroll back up, materials purchased on account for $147,000. So what do I debit and credit when I purchase materials on account? Very good. I'm going to debit materials and credit accounts payable. Now I don't have accounts payable up here, but we don't really need it other than that journal entry. So when I do my journal entry, I'm going to debit materials and credit accounts payable. That's just a standard journal entry. 147,000. And part B is a nice compound entry, very compound. It's materials requisitioned and factory labor used. So they're trying to really like stick it to us now, right? They lumped it all together. So we need to figure out direct materials used and charged to work in process, direct labor used and charged to work in process, and deal with our indirect materials and labor. So they lumped it all together, which I'm not really a big fan of. I like the materials and labor separated out, but we can do it. Yeah, we're going to, what we want to do, it's kind of tricky, a little tricky, but not super tricky, because we know when, let's look at materials first. So when we're dealing with materials, right, we know all of our materials cost is going to be a credit to materials, right, the total materials used. So I would add up all of my materials, including the indirect, to figure out how many materials were used. Okay, so I'm going to add up all of my materials, and I'll just tell you, it's like 139,110. That's both direct and indirect materials. Okay. So that's both direct and indirect materials. That's all the materials cost. And I could do the same for labor. I could add up my total labor, including the indirect, and you should get 152,540. So 152,540 will get credited to wages payable in the form of all labor. Okay. So we have our 2 credits. But now the thing is, we know we have to separate out direct and indirect, right? Because they go different places. So all of our direct material and all of our direct labor gets debited to work in process, right? We debited work in process for materials and labor. So in this situation, what I would do is I would take, the total and subtract out those indirect amounts. Probably the quickest way to get there, right? We just want the direct portions. So I probably add them both together and subtract out my total indirect.
And then it's work in process?
Yes. Yeah. So it should be 139,110 plus 152,540 minus 9,000 minus 20,160. Like I said, I don't really like that they combine the materials and labor, but we'll roll with it.
$262,490 be our work in process.
Very good. Yeah, 262,490. And that is direct materials and direct labor. And then the 9,000 of indirect materials plus the 20,160 of indirect labor is an actual overhead. So I could add those two together. So 29,160 is indirect materials and indirect labor. Again, they just combined it.
So actual overhead, we didn't affect.
Correct. Yeah, it gets debited to factory overhead as actual overhead. So when I do my journal entry on B, you should have a debit to work in process of 262,490. And again, that's all of our direct materials and direct labor. A debit to factory overhead for the actual indirect materials and indirect labor of 29,160. And then we have a credit to materials of 139,110. 139,110. And a credit to wages payable for 152,540. 152,540. Are there any questions on that journal entry? So now we've, acquisitioned or requisitioned all the materials and labor, both indirect and direct. And then we're on C. It says factory overhead costs incurred on account was 6,000. Well, they're just telling us we had factory overhead costs, actual factory overhead. So that could be like rent or something else. It doesn't tell us specifically. So since it's an actual charge, that'll just get debited to factory overhead. I really need to leave the cap on this. Trying to keep it from drying out, but it's kind of difficult. So that's just some factory overhead. We don't know what. And they said on account, so we're going to put it in accounts payable. So on C, it's just a debit to factory overhead and a credit to accounts payable. Okay. So anytime you see like incurred overhead costs, that's an actual overhead. And kind of the same with D. D is depreciation on machinery and equipment. Well, we know that's an overhead cost as well, okay? So for D, we're going to have another overhead, actual overhead, of 4,100 for depreciation. So that gets debited to factory overhead. And this is a good review from financial or college accounting, you're going to credit that to accumulated depreciation. We're recognizing the depreciation. So 4,100 debited to overhead and credited to accumulated depreciation. Part E, the factory overhead rate is $40 per machine hour. And then if you notice in the table, they give us all the machine hours used. Well, I need to know per job too, but right now I just need the total overhead. So this is your applied overhead. So I can take my total hours, 1,012, and multiply by the $40 rate. Because it said we applied overhead $40 per machine hour. So how much applied overhead do we have?
40,480.
Perfect. 40,480. So that's a work in process for applied overhead. And then that gets credited to our factory overhead.
So why do we credit factory overhead on that? Oh,
Yeah. Yeah, so that's how much we're going to, we would want to go in and calculate each job because that's a cost that goes to each job. But the total is what gets charged to work in process. So on E, you should have work in process debit of the 40,480 and a credit to factory overhead. Okay. Then comes the really fun part. I mean, that's been not too bad, right? It's like, okay. F. It says F, jobs completed 101, 102, 103, and 105. Well, we have to add up all the costs of all those jobs.
material, factory labor, and machine.
Mm-hmm. Yep. So this is where, again, it's kind of a lengthy one, but I wanted to cover it. So I'm going to give you a lot of the calculations. You might just make in your notes like how I got that. So what I would want to do is normally what I would do on paper, and I don't know, you can probably see some of my work. I actually listed each job, materials plus labor plus overhead, and added up each job, So that's what would probably, because we have to calculate the overhead applied for each job. So that's what I would do. I would calculate overhead for those jobs that were completed for those 4 jobs. So I calculated all of that. And then I took, for job 101, I took 19,320 of materials plus 19,500 of labor plus my overhead that I ended up calculating is 6,160. So I got a total cost for that one of 44,980. And then I did the same for my other 3 jobs. Okay, so just to save you the time and the effort, as long as you understand how I got those costs, does it make sense? So you just, the only one you're really having to figure out, you have materials and labor for each job, so you just have to calculate its overhead based on that $40. So you'd be taking 154 times 40, and then just adding those up. And I can always post the answer sheet to this problem on Canvas, so you guys can be like, that's where it came from, right? Yeah. We don't have time to do all those calculations. So all total, all the jobs for those 4 jobs, you should get a total cost of $175,090, $175,090. And again, those are in work in process, all that costs, and it needs to be in finished goods. So I'm debiting finished goods. What did I do? 175.90. And that was for job 101, 102, 103, 105. And that's coming out of work in process. So I'll post my answer to this particular one on Canvas for you guys, probably as an announcement, so you should be able to see it. So finished goods gets debited and work in process gets credited. It's just a lot of math. It's a lot of computation. So I always recommend, you know, just write down your jobs, or keep it in Excel if you like Excel. And same with G. On G, they want us to give the computation of cost, or no, yeah, the sales. So they told us in G, in part G, they told us the sales price. So when we're dealing with the sales, these are the prices we charge the customers. So on G, we just add them all up, those 3 jobs that were sold, 62,900, 87,000, or 700, 45,500. So on the sale, well, we billed the clients. So this is kind of a review. So if you bill a client for services rendered or goods sold, what would you debit and credit? We invoice the clients. Very good. Yeah, on G, you're going to debit accounts receivable and credit sales for the price we charged them, right? What we charged them for the jobs, which they gave us those 3 sales amounts. So that is all total, should add up to 189,100. 189,100. And then still on G, we have to recognize the cost of those 3 jobs. So 175.90 was all 4 jobs that were completed. Out of those, we sold, what was it, 101, 102, and 105? So we would want just those 3 jobs costs to be transferred to cost of goods. Okay? So we would, again, if you keep track of your 3 jobs, then we would know. We would have job 101, 102, and 105. The total for those is 142,610. Sold. And those would get debited. We don't really need this table anymore. Cost of goods sold. Cost of goods sold is an expense account. Okay, so cost of goods sold gets debited and finished goods gets credited. Okay. And I know we're running low on time, so I'm just going to kind of fill in the rest of this real quick, and then talk about one other thing if we have time. So we've done the journal entries. Now it just wants us to show the work in process T account. Well, we've already done it, thankfully. It's over on the board. So I'm just going to put those in, like B, the 262,490 got debited. Do what? I think so. Yeah, I think you'll have one just like it. So I'll post the answer key to this one out there. And then we had E, 40,480. Yeah. And you can, if you want, like when you know that you have to go do them, you can do the journal entry and then scroll down and do the T account. But I find it, if I just jot them down on a piece of paper, then I can kind of, and a lot of times on my piece of paper, I will label them like A, B, C, you know, through the transaction. And that way it's easy to fill in. I did not balance my T account though. So work in process, I would add up the totals and subtract out what I credited. Total debits minus total credit. So my new work in process balance should be 127,880. 127,880. And they just have you doing 2 T accounts. And then finished goods, put that one in F, the debit of 175.90. And a credit in G of 142,610. So your balance in finished goods should be the job that's left in there, the 103 that we didn't sell yet. So that 32,480 is the job that's still in finished goods. It's completed and not sold. Okay. Any questions on this? It's really just, I didn't balance mine on the board, but there's the balancing of those. A little bit cleaner than my writing. And then the last part they want us to do is, or the last two things, they have a schedule of unfinished jobs. Well, we only have two jobs that are not finished, 104 and 106. So 104 and 106. Well, this is pretty easy. You're just putting in the costs that we calculated. So again, the only costs that you might not have calculated yet were the overhead for those jobs. I'm going to give those to you. So 38,200 for materials, 36,500 for labor, and then I calculated overhead as 9,520. 9,520. It was the, well, this one was $40. $40 per machine hour. So I took machine hours times 40. Yeah. So then I would just add that up. Job 104 costs are 84,220. 84,220. 106 had 18,000 in materials. 18,000 in materials. 18,700 in direct labor. And overhead was 6,960. 6,960. So 106 total cost was 43,660. 43,660. And then I would just add those two jobs up. And you should get 127,880. 127,880. And that would match the balance in our work in process. Those are the only two jobs that we're still working on. And that's matching right here to this work in process balance. Okay. I always like it when things match, right? And then it wants to do a schedule of completed jobs. Well, you're just putting them all together. Or no, this is just finished goods, sorry. So just the job that was finished and not transferred out. So it wasn't sold. So the only job that's left in finished goods should be job 103. And we're just listing its costs. Okay. So direct materials is 13,440. 13,440. Labor is 14,000. 14,000. Overhead is $5,040. 5,040. For a total of 32,480. 32,480. And again, if I were to look at that T account, it would match that. I know that one's long, it's lengthy. Again, just use scrap paper and kind of keep track of all the calculations you make as you go. I think it makes it a little easier. The only other thing in this chapter, it's in your notes, and I think you have an exercise on it too, I just didn't have time, is dealing with this factory overhead account. Okay. We didn't really, we logged the actual and we logged the applied, but we didn't do anything with it. So I know I have like 3 minutes. So what we would do at the end of the period is we would add up our actual costs. Hopefully that's right. So my actual factory overhead was all three added up. So 39,260. And I applied 40,480. Well, they're never going to equal, right? Because applied, this is an estimated amount, and these were my actual costs. So what I would look at the end of the month, and it's kind of on your notes, what happens is if applied was more than the actual, then we applied more than the actual cost. It's over applied, okay? So you have on your notes, if it's over applied, you'll have an ending credit balance. So I would balance this account, right? Let me what? 1,220. In this example, I over applied factory overhead. It has an ending credit balance. If it has an ending credit balance, it's over applied. Whatever that amount was, I would debit to cost of goods sold and credit. I'm sorry. Not right. Yeah, debit factory overhead, sorry. But debit factory overhead to zero that out, and I would credit it to cost of goods sold. Yeah, we charge the customer more than the cost we incurred. Oopsie. So, yeah, so your overall goal with factory overhead is to calculate the balance and zero it out. So it's over applied, I'm going to debit it to zero it out, and I'm going to credit cost of goods sold. Okay. If this had ended with a debit balance, I would just reverse that entry. I would debit cost of goods sold and credit applied or factory overhead. I gave you those journal entries on your notes, but I just wanted to talk about it real quickly. Just when you see it, that's what it means. Because we always, at the end, we want factory overhead to be zeroed out. Okay, so we have to do something with that cost. Okay, woo, right at 5:30. Any questions? So what I'll do is I'll post the answer key to that last one out on Canvas so you can see all the calculations. And then start working on this homework and then come to me next Wednesday with questions. Okay? If we need to work through one or kind of talk about it, or come see me in my office or call me, email me, all of those things.